Good morning, ladies and gentlemen, and welcome to the PCI-PAL results presentation. To start with, if we could cover a couple of housekeeping items. Before we begin, we would like to submit the following poll, which you will see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via PCI-PAL@walbrookpr.com. The company may not be in a position to answer every question it receives today. However, the company will review all questions submitted and publish responses where appropriate. These will be available via your Investor Meet company dashboard. Finally, we would like to remind you that this presentation is being recorded. I would now like to hand you over to Chief Executive James Barham and Chief Financial Officer Ryan Murray.
Okay, many thanks, Tom. Thanks for the intro. Hello, everybody. Good morning or welcome, wherever you are, time zone wise. Thank you for joining us on a Friday. I know we normally run these things on a Thursday, but we had a packed week, and so it was the best time to fit it in. Really pleased to get the results out. Clearly, a slightly frustrating situation with the audit. Fully resolved now. I think we've been pretty clear in terms of what the situation was in the announcement that we've put out. So one of the main frustrations for me is that there's no real impact on the underlying business. So I was keen to get out and speak to investors this week. Very positive week with those that we've seen so far, and just really underline how well the business is performing under the surface. Strong run rate new business, high retention rates, high platform uptime, all the good things about this healthy growing company that we've built. So we're going to have a rattle through today. I've got Ryan with me as well, our new CFO. Ryan joined us just 9 days ago now. So we're going to go easy on him on this presentation. So Ryan's going to do a quick piece on some of the financials, but I expect it will be at the interims when you hear a bit more from Ryan. Obviously, when we'd planned that hire, we had expected to have our results out and actually have our AGM done by now. So, but he's done a great job meeting some of our investors this week. But a little more from Ryan in a moment once I get through the deck. So, in terms of the update, yeah, strong, sustainable business that we're building at PCI-PAL, quality revenues. We really have a foundation at this point to push on, particularly with the litigation behind us. So I'm completely focused on that and what the next 3 to 5 years looks like for this business. Revenue growth in the year up 20% year on year. Had it been for the deferred piece of revenue that you'd have seen in the updates from the audit, that would have been somewhat higher than that. And you do need to play that into your thinking. If you're looking at the market forecast for FY25, we are carrying a double piece of revenue effectively in FY25. So it's important to look below the surface there to see the sorts of growth rates we're expecting into the next year. ARR growth strong at 23%. Again, that one would have been higher than that, but for the change in the revenue recognition. And really buoyed by a strong operational performance in the business. So we had a good uplift in the amount of projects that we run, getting through to revenue recognition, and really good health. So I'll talk about customer retention in a moment. On to bullet point 4 there, the TACV. So this is the key future indicator of recurring revenue for PCI-PAL. It generally maps forward about 12 months for recurring revenue. So finished the year at 19.2%. That's up 19.2 million, up 17%. We're happy with that. I very much believe, and I've been talking to investors this week, that we can consistently grow that TACV over the next 3 years by sort of 18 to 20% region. Forecast, I think, for FY25 is 18%, but we certainly think we can achieve that. And I kind of see that as the baseline actually for this business. That's what we can do from the current plan. But, you know, we're going to be thinking about how we can push harder and we can grow this business quicker, but to do so from a profitable base. And that's very much something that I'm very focused on at the moment. Contributing to TACV was the ACV that we signed in the year. So we do report very clearly on the amount of new business licenses that we sign in the year. We know that investors like seeing that. 3.8 million. Now, actually, it's the only metric that's down year on year. So it's down 9 to 10% in the period. Slightly unusual year to a degree, because we ended the year feeling very buoyant on the sales side of the business. And the reason for that is because the damage on the ACV number was really done in our Q1. So we had a particularly quiet Q1. But since then, I've had 4 straight quarters either at budget or ahead of budget. And so from a new business sales perspective, as a CEO doing what we do, that's incredibly encouraging. We're hitting our sales forecast quarter to quarter across a 4-quarter basis. So and when I say 4 quarters, I'm including Q1 of FY 2025 into that as well. So the run rate business was particularly strong in FY 24. So in FY 23, the number was kind of buoyed by 1 or 2 particularly large deals, whereas FY 24 wasn't like that. And those that know us will know that I talk about accessing the breadth of the contact center market. It is the small to mid-market end that is the vast majority of the contact center space. We can sign enterprise customers. We've proved that. We've got a very strong enterprise customer base, a very high retention there, but it's that run rate that is really going to underpin the growth of the business going forward. So we had stronger run rate business across FY 24 than we've ever had. And that is testament to the partner ecosystem that we have built and continue to build on, and more on that in a moment. So yeah, I'm pleased with the sales momentum that we're seeing in the business. Looking at some of the other metrics that are key to our operations, customer satisfaction is high, customer retention is high at 97%. Churn in the business is just over 2.5%. That's just fantastic. So that's testament to the effort of our entire organization, but we're very pleased with how the customer success team is operating since we invested in that 2 years ago. And that's certainly contributing to that high customer retention that we have there. And that does contribute to the health of the revenue that I mentioned earlier. It's healthy revenues that we see. NRR at 102% was in line with where we expected it to be. We expected it to be north of 100%. We're going to hover around that level for the time being. I've spoken to investors about this before. NRR is no doubt where this business has an opportunity. When you've got retention rates like we have more opportunity to do more business with our existing customers. And that's even more valuable revenue when you can grow it through your existing customer base. So again, that's something that we're looking at very closely. That we've been evolving our product set over the last couple of years with more investment into product and engineering. And so we will start to see some of these add-ons and features that we're able to sell on to our existing customers. But longer term, we're looking at how can we really move the needle on NRR. Get that tracking up, not 105, not 110, but more than that. And that's something another thing that I'm super focused on with all this time I've got back post-patent case. The patent case is resolved. So long since forgotten, actually, to a degree, but very pleased to have got that settled at the end of the year. More pleased to have been very successful in the UK courts, won our case, won our counterclaims, invalidating our competitors' important patent, but then completely sensible in our view that we got a settlement that has not disrupted the business. And so we move on from there. So big distraction for the last 3 years and a big cost impact. So we now have a lot of mind space back, which is excellent, and very focused on growing this business. We've been doing Investor Meet Company presentations for a long time now. We are evolving the way we talk about this business a bit, but I'm not going to go into too much detail on the background. If you want more of that, you can watch some of the previous presentations. We're all about enabling businesses to have secure and frictionless payments in their business. And we do that across all business communications channels. So that is our market. And particularly that involves a very strong partner ecosystem that we have, incorporating some of the global leaders in the business communication space, particularly sorry to use acronyms, but CCaaS, UCaaS, and CPaaS vendors. These are contact center as a service, unified communications as a service, and communications platform as a service. Basically cloud communications, and it's where it's all at today from a communications perspective. And that is where PCI-PAL is particularly strong in our market. I've got a full update on our partner ecosystem shortly. So I'm going to move on from there. We've got some fantastic customers. We've got some great logos. We've got many more logos than the ones you can see there. We don't always have the opportunity to share the logos that we do work with, partly because we work through partners. So it's not directly our customer to necessarily share, but also companies these days are very sensitive to, using their branding as well. But we've got lots of very large customers across Europe and North America, as well as the small to mid market end that we serve. We've got more than 700 customers today. We're signing new customers at a rate of more than 200 a year, and certainly leading our market in terms of net new logos that we're bringing on. So just more evidence of the momentum that we're building in this business. Just onto our products in terms of what we do, and this has been evolving a little bit over the last few years. Looking at the sort of center of that graphic there that you can see, we talk about two kind of touch points that we see across business communications, and that's agent assisted and that's automated. So agent assisted is where you've effectively got a human to human interaction. Automated is where you've effectively got a human to computer or human to bot interaction. So traditionally that would have been more the IVR type interactions. So auto attendant, press 1 for this, press 2 for that, or speech recognition. But more commonly now what we're seeing is conversational AI. So we're seeing bots actually fulfill those interactions with consumers. Well, that's still very much part of our market, be it that it's relatively new into the space. And then kind of sitting underneath these two sort of categories that we have are 3 core products. Those 3 core products are click to pay, speak to pay, and key to pay. And effectively what we're doing with those offerings is we are facilitating payments across those different channels. So click to pay, we're sending out secure digital links that are completely integrated to the communications environment, the desktop environment, and any payment service providers that the organization uses. And also with click to pay, when the customer clicks on our link, which might be served through a web chat session, it might come through a notification in an app or an SMS link, they'll be presented with a PCI-PAL payment page. And within that payment page, we can take a credit or a debit card payment, but also we can take any number of other digital payments as well. So it's much more like an e-commerce experience. The consumer will be able to use their Klarna account, for instance. If that retailer that's using us uses Klarna, they'll be able to make an Apple Pay payment or a Google Pay payment, particularly if they're on their mobile phone. So it's a really nice customer experience that they get to go through. And we're seeing more and more uptake in the click to pay offering. And we actually lead with click to pay as well now, because it's much more common. And then more historically, those that know us well, excuse me, will know that key to pay was kind of the traditional solution, which is the DTMF masking, so keypad masking, with a customer typing their card details in rather than speaking them to a call center agent. And PCI-PAL intercepts the tones and processes the payment for that organization. We also have a speech recognition version of that solution, which is speak to pay. We made a significant enhancement to our speech recognition capabilities at the back end of FY23. And we've been very successful across FY24 in both rolling that out to existing speech customers that we had, but also selling it to new customers coming through. And one of the trends we're starting to see is some customers looking to leverage speak to pay as the primary over and above key to pay in the voice channel, which is quite interesting, but it shows you the sophistication of the speech recognition capability that we have, which is also AI leverage technology as well within that we've partnered with Microsoft on. On the top left there, just to sort of highlight some of the differences from when you've seen us before. Obviously, our core market is contact centers or call centers. and we serve the breadth of the contact center market. We do, though, talk about customer-facing teams. We're doing more now where we're servicing employees that are taking payments in environments outside of contact centers. So quite commonly, that might be a finance team, for instance, or debt recovery, those sorts of things, but perhaps not in a contact center environment. And so we're working with our partners who have businesses across contact center communications, but also unified communications as well. So we very much aren't just looking at the contact center today. We will deploy our services outside of that. And then on the bottom right-hand side there, we're referencing technology. I've talked about secure digital links, DTMF masking, speech recognition. Conversational AI as well is something you're going to hear a bit more from me in the presentation, and the impact that is having on the contact center market, and frankly, the opportunity that's presenting to us at PCI-PAL, but more to come on that when I get to the partners slide. In terms of the strategy for the group, clearly it's a lot more detailed than these three circles or bubbles on screen right here, but it's very much been and continues to be about being the leader in cloud in our market. We were the first to market with true public cloud offering. We have a single public cloud instance that's fully multi-tenanted. We believe we've got more customers than any of our competitors using our type of solutions across that global cloud platform. I'll give you an update in a moment on how well that platform is performing for us. The public cloud platform gives us the ability to access the breadth of our market globally. What we do is a little bit niche, you could say, but it is a global market. And the standards are very similar globally. The technology is very similar globally. Our partners have businesses globally, and the public cloud platform enables us to actually access the breadth of that environment. And then we use the channel as a sales model to cost effectively access those customers. So we've got the technology to do it. And then we use channel partners, so big resellers really, who we work very closely with. They productize our solutions, and then we leverage their businesses to market and sell our products. And that allows us to be much more cost efficient within the business. So although we're a global business, we're only 130 people, and we're able to do that because of the nature of our technology and our partner ecosystem. So a tiny bit more on the technology. So global coverage that we've got. I mean, not a huge amount has changed here in terms of where we're located, I might add. And so, predominantly as a UK headquartered business, majority of our headcount is in the UK. That's because we have engineering and a number of back office functions here, as well as typical sales and marketing. In the US, North America, we are much more customer facing focused in terms of the resources that we have there. So we have sales, marketing, professional services, and a small element of engineering, which is more focused towards customer deployments in North America as well. And then we have a small team out in Australia, in Sydney, which is doing an excellent job. We realised across this year that we've never lost a customer in Australia. So 100% retention of customers across Australia, not just in FY24, but pretty much forever, which is fantastic. So we're building a profitable little base in Australia, which we plan to use to grow further across the other continents nearby. In terms of the platform itself, the key point here is the stability, maturity, and the reliability of the platform that we have. Everything's in Amazon Web Services. We can scale the platform very quickly. The orange padlocks on the slide there show you where we have availability zones within Amazon Web Services. We can actually spin up an instance within Amazon Web Services within hours if we choose to. We don't need to grow more than what we have today. And in terms of our reliability stats, they really are very good. And so across FY24, we had 3 quarters at 100% uptime, which I think is top percentile, we'd call that top percentile performance. Across the year, it was over 99.999%, so over 5 nines uptime. Pleased to tell you that Q1 for FY25 was another quarter at 100% uptime. So, these sorts of foundations in our technology give me so much confidence in being able to build on this in the future. To have that platform there so robust gives us the ability to completely focus on opportunity rather than looking backwards at resolving, problems we might have. So it's a really great place for us to find ourselves in. Partner ecosystem. So this is a huge part of our business. We have lived and breathed channel for pretty much since day one of starting this journey back in sort of 2016, 2017 time. And it took a bit of time to get going when the majority of our business at those times was still direct. But for the last 3 to 4 years, we have been selling at least 70% of our business through our partner ecosystem. And in FY24, 80% of our business came through our partners, 70% of the ACV value. That's really good metrics for us to see. I think value-wise, if we do sign direct, they do tend to be slightly larger, so that will proportionally push down the value we get through partners. But we're even seeing an uptick in the amount of enterprise opportunities coming through our pipelines through our partners. Again, I'm not going to go too much into the detail on how we categorize these partners. I've done that before on previous presentations, but we have some fantastic names that not only do we work with, but they resell us. So they sell us on their paper. We are fully productized with those organizations. We have peer-to-peer relationships across product, marketing, customer success, sales. We're building really strong relationships with mostly these very large US headquartered organizations. In FY24, we announced the signing of a new strategic partner for us, which was Zoom, which I'm sure everybody has heard of, although probably more for their video conferencing business and possibly their unified communications business. Zoom are a Gartner Magic Quadrant in the UCaaS space leader. Their contact center business is something they are heavily investing in right now. So they are coming in fast as a challenger into the market. And we've had a really good start with them. So we announced in Q4 that we've now got them to full launch. So general availability after the productization across North America and EMEA. There is some other regions globally to come through off the back of that. And then also we announced we'd signed our first customers in the partnership in both the UK and the US. And we've continued some of that momentum into FY25 in our Q1 already. So there's a lot more we can do there. And they're already proving to be a really, really successful partnership, which aligns very nicely with some of the more established partnerships that you can see there with Genesys, TalkDesk, and 8x8 and those sorts of organizations who we've worked with for a relatively long time. We won Tech Partner of the Year globally for 8x8. Great to see. I was met with their executive team recently and very pleased with how that relationship's going. So yeah, all in all, partner ecosystem is an area of the business that we need to leverage more as we grow. And there is much more opportunity to work deeper and broader with these large partners that we have. And that's one of the key initiatives that we've set ourselves this year within the business. We started investing more into our channel management team. We call it our strategic alliances team, is the terminology we use. And we will continue to invest in that as a priority over the next 3 years. So we're investing in holistic management of those relationships rather than just simply investing in more sales heads. We're all about growing the strength of that relationship, which then will feed healthy pipeline, healthy revenue that is then sustainable into the business. And that's what we're all about. And that's how sophisticated we've become since we first sort of started going down the channel route more than 5 years ago now. Now I'm going to hand over to Ryan for just a brief moment, really, just to introduce yourself, Ryan, to the group. But you'll get a lot more opportunity to speak to Ryan at the interims otherwise, and then we'll hand back over to me.
Thank you, James, and good morning, everyone. I am excited to be joining PCI-PAL on its journey. And thank you for joining us today. As James outlined, it's the end of my second week of the business, so I'm getting my feet under the table and beginning to understand what's going on. Therefore, I am happy to present some of the financial highlights for the year ended 2024. And So pleased to say that the revenues increased 20% year on year. But most importantly, within that, actually, it was the recurring revenues had seen growth of 24%, which really underscores the growth in the key revenue stream within the business. And flowing on from that, gross margins were delivered an increase as well, up to 89% from 88% the year before, which is works making progress towards our target of ultimately 90% for the business. So with the growing revenues combined with the margins, the business should continue to drive operational gearing, which in turn provides the real opportunity to reinvest in the business to continue to drive the growth and, in that top line recurring revenue line. If we look at the next slide, James, if you don't mind.
Sorry, I'm in control of the slides. I've forgotten for a moment.
Yeah. As James mentioned, it's a real global offering, and it's pleasing to see that the revenue growth was experienced across all three of the main geographic regions. EMEA, probably the market we're most mature in, still seeing double-digit growth at 13%. And then North America and ANZ experiencing 32 and 82% growth, which really highlights the opportunity in these markets and why it is important for the company to continue to invest and to capitalize on these opportunities. One of the other significant milestones I'd like to highlight for the business this year, and despite the challenges that have happened over the last couple of months that you've heard about, was delivered a positive EBITDA. It was first time since relaunch, and that's dedication, discipline of the business in delivering on that, and it's demonstrating the operational gearing that it can deliver and will continue to deliver to and reinvest in the business. I think underlying all of that is actually an ongoing, really solid run rate and growth in the run rate of the business. As James outlined earlier on, the small to mid market contact center is the focus of the business. And yes, larger deals will come as they did in 2023. And of course, we'll take advantage of them. But if you look at the underlying run rate of the business and the core target customer, this remains really, really strong, which gives good confidence in the revenues and the future growths and the revenues. Following on from that is also the excellent customer retention rates, up from 95% last year to 97% this year, which really highlights the quality of the revenue and the confidence in the revenue. And from that, the business enabled to make decisions about investing to ensure we drive growth for the years ahead. And ultimately, yes, it is a people business, and you just see the headcount has significantly grown from 2021, from 71 people up to 122. And it's important that we keep investing in the business. But on the people front, we're expecting that to slow down overall going forward as the business is really reaching the operational gearing level. The patent case, obviously, everybody is pleased to hear that is fully settled and the business to focus on the opportunity ahead. And the business ultimately is now cash generative and cash flow positive, with 4.3 million cash on hand. So all in all, it's a strong balance sheet and a solid position to push forward from. So that's all from me this time, and thank you very much. I look forward to providing you with more detail the next time that we speak.
Okay, thanks. Excuse me. Thanks, Ryan. I was just sort of busily flicking through some of the questions that have been coming through for later, so we should have time for some questions at the end. And so just on to product update before we look to wrap up with an outlook. So good momentum here. We've been investing in product and engineering, or we certainly did a couple of years ago, to grow that team to allow us to develop more features and enhancements to what we're doing. I would say that maintaining the sort of tight-knit integrations that we have with our partner ecosystem in itself requires quite a lot of effort, but that is clearly very critical to the business and also keeps us ahead of the competition as well. So broadly speaking, the engineering team have performed very well across FY24, and I'm happy with what's been produced. bit verbose this slide, I'm afraid, but I'll talk to it rather than reading it out. So new user interface, we've been talking about that for a little while now, so pleased to say that's at full launch now. So new user interface, so that's both for the agent and for the consumer that's using that across any of the channels, so live voice, or if it's across a web chat session or a chatbot session, whatever. So the new user interface that customers are using, we're now selling that as part of any direct sales that we're making, and we're currently going through a process to roll that new user interface out to all our key partners, and we expect to have that achieved by the end of this quarter, actually, so by the end of H1 FY25. One of the, apart from looking nice, one of the other aspects of the new user interface is that it incorporates all the new digital payment features that we've been releasing over time. They have been available within the previous version, but this is a much easier way, particularly for our partners, to incorporate those add-ons, which in turn will create some add-on revenue opportunities for PCI-PAL as we go forward. But also it creates much more parity between using PCI-PAL's services within the contact center and the features that might be available in an e-commerce, on a website, for instance. So that's a good step forward for us. Moving down onto bullet point number 2 there, we've really been, for a long time now, been trying to drive towards more autonomy for our partners and our customers to actually be able to deploy or gain access to our services themselves without full involvement from PCI-PAL. We have a deployment time in this SaaS business that on average is about 5 months. Now, with some of the newer integrations that we've got with the likes of Zoom, we're seeing that reducing substantially, but that time to revenue effectively is something we're often looking at. We look at that as a key internal metric. Now, as a business, we have over 100 payment service provider integrations that we maintain. And that in itself carries a lot of value. We have released something we've been working on for quite a while, a new microservices or payment microservices infrastructure for our PSP integrations that we have. And what this effectively means is that rather than having developers complete the integrations to payment gateways and to other payment environments, we've actually created an environment in which we can then have operations level people actually complete those integrations. So that means that it's much more cost effective for us to do it. It can be done much faster. And then it also means the maintenance of those integrations, because you don't just, they do change over time. It is much easier for us as well. So that's quite important from a scaling perspective, but it also means that we are improving and feeding our opportunity within an area of the business that actually does carry quite a lot of value to us. That kind of the fact that we potentially inadvertently kind of aggregate across payment providers is really very, very interesting to us at this point as we look sort of more longer term from a product perspective. But today, operationally, that's a big help for us having the new payment microservice in place. Fair amount of work going on data infrastructure. Talk about that in a moment when I get to the AI section. To bullet point number 3 there on the top right. We've launched a new go-to-market model, something we've been working on for a while. And again, this kind of goes back to our desire longer term to put more in the hands of our customers and partners for particularly small to mid-size customers to go live with less involvement from PCI-PAL. So how can we achieve that? Well, we've got the new user interface that helps in part, the new payment microservices. That's another building block to that as well. And the new go-to-market model. So we are now live with this go-to-market model. So we have a standardization process for many small to market to mid-market opportunities that we're dealing with. And what I mean by standardized is that it's a slightly more rigid structure to the products that they're able to gain access to. Now, we tried to do this before, but I would say it wasn't as successful as we wanted it to be, and we got some resistance. The reason we're doing it now, and it appears to be that we're doing it successfully, is because we have built in so many additional features and enhancements, that actually the standardized version of our product is pretty much as good as anything out there anyway. So when we're really looking at custom solutions, which we're much more interested in doing for enterprise size customers, that might be new IP that we're developing, or completely new innovation that we're doing, or something that's very bespoke for that enterprise customer. So we're actually at a more mature stage from a product perspective that we've been able to successfully start rolling out this standardized approach, which again, we think will drive improvements in time to go live, which is the TTGL metric we mentioned. It's the same as time to revenue or time to value, whatever you want to call it. So yeah, very pleased with that. And again, that is also being rolled out to those key partners at the same time as the user interface. So by the end of H1 FY25, that's when we expect to have certainly our top 5 partners rolled out to for that go-to-market model. And then I would expect to see some of the gains coming through in time to go live. And then just finally there on artificial intelligence, so AI, if you haven't already, we spent a fair amount of time really refreshing the market overview section of my CEO report in the accounts. And I'm not necessarily talking to the quality of my writing, but you might be interested in some of the market research reports that are included in there. There's been some very recent work on the impacts of AI on the contact center market today and potentially in the future. And as I've explained already, with conversational AI, we see that very much as an opportunity for us. We're using AI internally for cost efficiencies. We've got a key initiative across FY25 about single source of truth for our data within the business. So looking to use data to gain better insights, to give our customers better insights, to allow us to build out our own AI product roadmap as well. So, we're talking about the early stages of a payment bot that we have at the moment in prototype, and that works through both a voice and text basis, and also a payment bot API for conversational AI vendors. So I think I skipped over this in the partner section, but we now have across FY24, we've signed 3 conversational AI resellers. And so we really don't mind whether it's a bot or if it's a human on the other end of it. Still needs to take a payment, still doesn't have the integrations to the payment environments, doesn't necessarily have the integrations to the communications environment either. And often enough, they're not PCI compliant either. So for us, we don't see a substantial risk from AI based on the assessment that we've made. We see opportunity today, though we're looking at it super close, and it's a very important leadership objective for us this year to keep close to it and spot the opportunities and deal with any risks as they come. But product wise, hopefully I've got the message across that we intend to use what we've built today as a foundation for this business. We don't expect over the next 5 years to just continue doing exactly what we've done for the last 3. We plan to evolve. We will capitalize on the go-to-market strength that we've got and on the platform that we've built. And that's very much in our intention. And keeping with what I've explained to investors for a number of years now, when we hit profitability, we will use that profit to reinvest in the business for growth. We believe that's what the majority of our investors want to see. And we believe ultimately that is what is going to drive real value in this business. So just rounding out on the outlook, we feel very positive about the business. I'm very excited about the business right now. It was a pain, the audit process that we went through, but we should be whiter than white off the back of that process. And we've started this year well. ACV new business is where we wanted it to be for the first quarter. Retention continues to be strong. There's a great vibe in the business. People retention's high, culture's great. We're going to have a fun year. We're going to enjoy it. We're going to work really hard. We feel very good about the business right now. So pipeline's growing. I couldn't feel better about PCI-PAL right now, having got some of that stuff behind us from the patent case and such like. So that rounds out the presentation for today. Thank you all for joining us. We will move to some questions. Normally I use the CFO section, which is shorter than normal, to read some of those in advance. So we'll see how we get on with those. But I'm gonna dive in to pick some of those. So one of the questions I saw come through earlier on was related to growth rates and what do we see as accelerators for growth. And I think that's an important question to answer on this forum. So accelerators for growth are more of the same, first and foremost. So we are limited on what we can invest in this business right now. And the reason we're limited is not cash. It is that we've hit this point of break even and shift into profitability. So we haven't quite got the hockey stick through the operational gearing yet, but we have profits that we're able to invest in the business. But that's more limited over the next 18 months. As the operational gearing and cost efficiencies come through, then back half of FY 26, 27, 28 onwards, we're going to have more profits to invest for top line organic growth. And that's something that we are intending to do at this point, but we do intend to stay profitable. So that's one aspect to it. Anything we do related to growth will be looking to leverage our global cloud platform and potentially in the majority of cases also leverage our go-to-market model with our partners and leveraging our partner ecosystem. So looking to build on those things. So deeper, broader relationships with partners, either through further geographic expansion, which would be partner-led, to broader product sets that we can also take through those same partners. So product adjacency is something we're considering. So not just features and enhancements, but adjacent products, that make sense, but actually carry their own revenue stream, their own revenue line. So those sorts of things. Just jump in some of the other ones.
Yes,
I think the questions about the patent case. About did we recover all of our costs? I can't comment on the settlement. It was a confidential settlement. What I can tell you is that we didn't change our market forecasts around that time. And the other point I will make is that we recovered our costs on the UK side, or certainly a proportion of our costs, having won the case. So they were recovered. We received that payment and we announced that. There is no concept of cost recovery in the US litigation system for patents. So we were not going to get costs back in the US. So yes, that factored into our decision as to whether we wanted to continue with the process when we had an opportunity to settle the case. So I think broadly speaking, having spoken to a lot of our investors, I'm very satisfied with what we did. I think it's the right thing to do. We are not a big business, so it was a distraction to management, and we are much better off being 100% focused on growing the business and moving forward. And that's a decision we took. Let me pick out some other ones.
Yeah, and while you're having a look at that, James, maybe investors, if you do have questions, if you could continue to submit via the Q&A tab on the top right-hand corner of your screens. And while James is just looking at those, I'd like to remind you that this presentation is being recorded, and for anyone who has got investors who weren't able to make this meeting, it will be on replay, so we'll be able to play that back in due course.
Yeah, there's a number of questions around sort of levels of profit, and there's some questions around dividends as well. I think the message should come across from us that we're investing for growth. And that's what we intend to do. So the cash reserves that we have in the business, we intend to use those over the next 2 to 3 years to invest in the business for growth. And that's very much the focus of the business. We believe that if we deliver stronger top line growth, that will deliver more value to shareholders longer term than profitability at the bottom line. Now, profitability is key, but at a level that will allow us to invest in the business. So that's generally where we sit today. And hopefully that gives you the position of the board right now in terms of what we intend to do with the business. Okay, I think, Tom,
I think that
probably
probably
covers
rounds
the
that
vast
out.
majority
Yeah, that
now.
covers those, I think, in a
Yeah.
collective response. Super, great. Okay, well, look, thank you, James. Thank you, Ryan. Could I ask investors not to close this session, as you'll be automatically redirected for the opportunity to provide your feedback. If anyone has further questions or would like additional information on PCI-PAL, please do get in touch via pcipal@walbrookpr.com. Many thanks for attending today's presentation, and we look forward to updating you again soon.
Yep, thanks all.